Good morning, everyone, and welcome to the European crossover webinar on NFP Day. We're seeing a relatively quiet session. We are seeing the euro. I wouldn't say personal lows because we're just hovering right at these lows, but continue to see the dollar yen continue to push up a little bit higher here. And peso continues to go on and just sit here towards the bottom. Dollar CAD had a pretty nice run up yesterday, although we paired back once we got above the 3100, and Aussie continues to be at really a very key level. We need to go and defend that. We'll see that on the daily, but we'll get to all those later. Let's go on and take a look at the economic data. We just had the release of Italian industrial output, and that's going to be it, with the exception of Spanish industrial output that came out earlier, until we come into the States and we get non-farm payroll. They're looking for 164,000. The prior was 266. Unemployment rate is expected to come in at 3.5. The prior was 3.5. And Canadian employment, that is expected to be, coming at 25,000. We saw quite the sell-off last month, minus 71,000. So in all likelihood, you would see a bounce back. That's one of the points that Blake was making. So we're looking for, at least the market's looking for, a gain of 25,000. Let's see here. And other than wholesale trade, that's going to be it. So it's not like as if we have another key number that would come out at 10 a.m. Eastern, obviously 9 a.m. Central Standard Time, where I'm at, or let's say, something like University of Michigan, fresh number. Wholesale trade is not going to be a big mover. So we'll see what happens here right off the bat with non-farm payroll. Obviously, Canadian jobs going to be key also with the bounce back we've seen here in the dollar CAD. With that, we'll go on and move on. The news is very light, so we have just one story. So hang on. And even then, it's light. Aussie Kiwi shine as risk appetite returns and the dollar's firm. The Australian dollar and its New Zealand counterpart led gains among major currencies on Friday as easing geopolitical tensions prompted investors to buy riskier currencies, with relatively upbeat U.S. economic data this week also benefiting sentiment. The greenback held firm against a broad basket of its rivals and is on track to post its best week in 2 months, as the prospect of war in the Middle East ebbed as the United States and Iran backed away from further confrontation. Risk sentiment is back on thanks to easing geopolitical tensions and hopes of an interim trade deal between China and the U.S. as early as next week, said Manuel Oliveri. The Aussie gained 1/3% to 68.75. Though strength was curbed on rising bets of an interest rate cut as early as February due to the weeks of brush fires that have cast a shadow over the broader economy. The Kiwi dollar also edged up 0.2% on a weekly basis, so the greenback has broadly outperformed in the G10 FX space thanks to strong data this week, with data showing a pickup in the U.S. service sector, falling jobless claims, and solid payroll hiring. The data also put a floor under the recent shrinking of interest rate differentials between the U.S. and European bonds, with spreads between U.S. Treasuries and equivalent German debt for 10-year maturities trading at near 210 basis points. There's nothing fundamental to drive people out of the U.S. dollar at this stage. said Australia's head of FX strategy, Ray Trail. Against the basket of its rivals, the dollar index to greenback edged 0.6, its biggest weekly rise since November. It held firm at 97.44 on Friday. We're currently, as you can see, 97.51. Most other major currencies were modest on Friday, with traders focused on December job market data due at 13:30. The consensus forecast is for 164,000 extra jobs in December, following a bumper 266 out of November. Another strong performer this week has been the Chinese yuan, which has climbed to a 5-month high despite the geopolitical turbulence on growing optimism as the January 15th date for signing the Sino-US trade deal nears. With that, let's go on and get started, get prepped for NFP. So the euro ahead of the NFP remained under pressure in a quiet session. Key support is going to be 1078. Confluence with the upside trend line followed by 1055. So this 1078 is going to come in. You can see right there coming across the board. We showed it yesterday. That was actually our support for yesterday, which is 1078. You can see here just right there coming in is going to right there. You can see that. And that's going to be confluence here with this trend line. The trend line might be a couple of pips lower, but it's basically right there. It's the same space. Followed by 1055. And you can see that coming in right there. Okay, followed by 1055. A daily close below 1078 would allow for a challenge of 110. Resistance is going to be 1130. And that 1130, you can see that right there, is key on the pop back, followed by 1150. A daily close above 1170 will place a bulls back in control. So if we do get a daily close above 1170, bulls back in good shape. So bear with me. $10.78/55. Upside 1130/50. We're still giving this the benefit of the doubt because it's above this trend line for now. So giving it the benefit of the doubt, but like I said, a daily close below 1078, we're looking for a move down here to 110. You can see right where we're coming up with that. Let's go and move into the cable. Now, getting back to the euro, my thoughts is they would push it lower if we, probably a decent number. And we may, at least initially, we may languish a bit here. We don't want to garner any momentum going further. And we might come down here, may move up a little bit higher. We might even challenge it again, take out those high lows. And then we need to hold there. And then little by little, we may start to push. That'll be one scenario. I still I like the euro favorably overall. Now, once again, I think we could easily slip and come. We might take out this 1078, and then we try and maybe move up in here up to 1090, maybe up to 111.02, and then we come back down, and maybe we take out the lows by just a little bit. And then you got to see what the market's made of at that point. When we start to move a little bit higher, we consolidate. Then we can start to see if we can move higher, see what happens after that. Let's get into the cable. The cable press lowered below support level of 30.50. Remember, yesterday we had support at 30.50 right there. So cable press below support level 30.50, but managed to close slightly above that. Okay, you can see right now we're at 30.61. Here's that 30.50 we're looking at. We did dip below that. Support on NFP is going to be the pivot, which is 29.80. A close below will turn the pair bearish with a push to 28.38. So it's key we hold this 29.80. If we go below that, then we're going to come down here to 28.38. At least that's what I believe. We're going to come down to 28.38. You can see all these touches coming across. And upside resistance is going to be 31.70. Okay, you can see right there. Right there. There. It's going to be 31.70 with the daily close above 31.95, this level right here, negating the bears' control. Because obviously the bears are in control of this thing, even though it's still in a bullish mode. There's no doubt about that. But right now the bears have control of the short-term momentum. So that being said, 29. We're looking for 29.80. Which isn't that far away here. So that would be key also on the close if we lost that. And on the upside, let's see if we can tighten this up a bit here. So we'll go to 31.23. There. So the Aussie dollar is holding just above the key support level of 68.48. We've had that key support in place now. It's going to be the third day in a row that we had 68.48. It was actually a level that we thought potentially the market could get to. We had that at the beginning of the week. Was thinking that we wouldn't get to there, but there was a potential. Certainly we did. As we continued to move further down, and boom, 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 and we made it down there. But you can see it's holding. You can see the significance because we've got the broken trend line here. A break below has supported 68.08. Bulls need to not only defend this area, which is 68.48 on the closing, but muster a close above 69.14, which may be a tall order, in order to regain momentum. A lower close sends a pair to 67.50. So if we have this 68.48, but there's followed up by 68.08. If we do get a close below this level, then we're moving in all likelihood to 67.50. Because then we would not only be losing this level, we'd be closing potentially below this trend line. We shall see how things get developed. And they're doing a good job holding this area. I mean, you've got a good confluence here. Not only you have that, but you got the broken trend line, what they're returning to. But they really need to close above 69.14. They really need, and you can maybe almost lower it there at 69.08. But we'll leave it at 69.14. But they need, if they can close above 69.14, they'll regain momentum. So Kiwi closed with a medium-legged doji, and here. It's odd because it wasn't like that. But anyway, take a look at something real quick. And I don't know why I didn't save that, but I did. I actually saved my own analysis separately, so I'd have that. So it didn't save it in the FX Asian period, but I do have it myself where I saved it. Anyway, it says the Kiwi weakened ahead of the NFP. Support comes in at 65.73, followed by 65.42. The confluences were 65.44 to 38%. You can see right here. So we do have, as I mentioned, support on the downside. It's going to be 65.73, followed by 65.42. You can see right here. And that confluences with 65.44, the 38%. Here's a 73. So let's go on in here. But you can see it right here, cut right here, and then right there, the 38% back. Resistance is going to be 66.91, and that looks like kind of a bit of a far-fetched stretch for right now. It's key, but might be considered a secondary resistance level. So we're currently at 66.16. Resistance. Let's take a look at this on a 2-hour. Is going to be 66.60. So it's there you go. Now, CAD's interesting, and we'll get to that. Dollar CAD popped above 3,100, only to slide back at the close to 30.56. Friday is the Canadian jobs report. A rally will find resistance at 31.13. You see that here, followed by 31.36. A daily close above 31.80 would reverse the fortunes and place bulls back in full control. Support is 30.29. I think you have to be careful on this one, and I'll tell you why. I was trying to short it yesterday at 31.13, and we're talking in the chat room. Or I'd mentioned, I posted even a chart off of a book map. And they were offering, when we looked at the 6C, it was equivalent to the 31.13, and they were offering close to, I think, 1,200 contracts in the futures. I mean, they were bid, let's say, because it was a 6C. They were bid at on the 6C, which would trade inverse to this, and would have been equivalent to that same 31.13. Just happened to be here, and I looked on there, and then I said, wow, it came up short of that. But here's the key that we had this issue. I don't know where it was. It may have been here. This may have been non-farm payroll here. Let's see. Maybe it was here. I don't know. We saw that where we really ripped up higher, really turned reverse fortunes on the Canadian dollar. I think it was either, maybe this is a date. Yeah, it had been here, October the 2nd. And boy, did we turn things around. If that was the date, like I said, I'm thinking, the point is, I don't know if it was 2 months ago or 3 months ago, we really turned things around here in there. Now, you can see here is that we'd come down here, and remember the analysis really since, I think it was last week, we potentially were looking for a move down to 2902. And remember how quickly we slipped through here. Remember we had 3156, and then we're looking for them to hold at 3129. I think it was down here, and then we just really broke them, and they really came apart. And actually, I think it was 3056, yeah, right here, and 3029. Okay, and we break here like it's just almost an afterthought. We're going to go down to 2902. But look how we held here, okay? And then we reversed, and boy, did we add on to it yesterday. Now, we came off. The market's already tagged up here, so it'll be interesting. It reminds me of what I was saying about the euro. If you look in the same context, is I think that we can, like with the euro, I'll give you an example. I want to get back to that so be clear. We're already under some pressure. So we can probably break lower, maybe rally back up about 18 pips, and then break lower again, and then hold. And then maybe we can start moving a little bit higher. We shall see. But getting back to the dollar CAD, let's see how, okay, remember, look at this number from the prior month. This is freaking huge. Lost 71,000 jobs. So looking for a bounce back number of 25,000. If we don't get that much of a bounce back number, this thing could really pop. And I remember, like I said, I guess it was 3 months ago. Maybe that was October. I don't remember. It must have been this date here. I'm thinking it's here. And this market just ripped. And look at the prior day. Look at that. It came up, although it was working on the lows, but remember it kept making all these stabs up here, and then it ripped higher, everybody. And so that's what I'm thinking. Be careful, because we had so much short covering that there's some room to go. Normally, I'm thinking I would have just gone and grabbed that 131.13, and if we got that, we'll see where we stand and what's the offers on the 6C at that area. But my guess is, and I remember this move because I remember, I guess it was resistance here. I guess it would have been 32.64, and then we just ripped 32.64, then 32. I think it was 88, and then we just ripped strong on the day. So let's see how this plays out. The old saying, Art Cashin says, second mouse gets the cheese. So let's see how that number comes out and how it reacts to 31.13 and 31.36. But like I said, that's why I put those numbers ahead with 31.13, 36. But mention if we get a close above 31.80 with reverse fortunes. So anyway, just a couple of words of caution. And the reason I'm saying that here, because it also reminds me of what the dollar yen's done. I love the dollar yen's a little bit different, but look at that dollar yen. It's right on the bid. So once again, just offering some words of caution on this. So we're going to have resistance is going to be 3113/36. On the downside, we've got 3029. Let's see, and beyond, let's take a look here on the 2-hour. Would be right there, 3003. Let's go move into the peso. So the dollar peso continued to languish at the lows ahead of NFP. Support held at 1875, but the door remains open for a move to 1865, which is confluencing with 1862, the 161%. Resistance is going to be 1892, followed by 1898. Just one moment. We had 1870. Let's go here. 65. And this is just, every bit of a sniff of a rally is quickly sold into. Let's go move into the dollar yen. The dollar yen has recaptured the 927 pivot, setting the pair up for a bullish breakout. A daily close above 964 allows for initial move to 1047 with 1007 as a pause. So here's the 1047 we're referencing right there. Right there. With a pause of 1007. And once again, that's a daily close above right there, 964. Support's going to be 902, followed by 886. We'll go and list the 1007. And right now, you got to give it the bullish because it did regain the pivot. Here's the deal also is that even if the number comes in weaker, they're still going to defend it until, because they still have that signing for the phase one deal. So the S&Ps are still going to be supported. So it's hard to see this thing coming off too much. Now we might eventually afterwards, but for right now. The dollar index rebounded, closing short of key resistance at 97.42. Well, we're right above it right now, but you can see the resistance right there. A daily close above negates the downside pull and the lows for the market to re-challenge, which would be 97.89. 97.89. So if we get this close above this level, we're going to negate the lows here and allow for a challenge to 97.89. Support's going to be 96.80, but that's obviously a ways off. So interim support will be 97.13. We're right there at the cusp. Before we get there, we've got 97.6. Well, let's just go with 97.89. Because say at 66 is almost a joke, although you can see right there, pretty close to it. 69. Go with it's 97.89, just absolutely huge. Just huge. The case is out right now, or the jury's out on this. It certainly looks bullish at this point, but let's see how we hold up. We don't want to turn it bullish and then turn around and turn it back to bearish. So let's hold the stand where we're at right now. We'll move into the cross rates. Resistance for right now is just going to be a little bit hard, depending on what happens with the yen. So we're going to go with 72.78. And support is going to remain the 72.31 for right now. I don't see any changes here on these right now. Euro yen, we had 21.53. Yeah, there's a little bit of a change here. If euro comes apart, it'd be 21.93. And 2092, actually get 2094 for support. Once again, not that many changes here for the cross rates. Euro odd, you can see here the weakness here. Support is going to be right there at 61.02. Resistance is going to be 61.91. We've been, I mean, I won't say it's relatively all quiet. It's not, but I mean, there's those that are being impacted by the euro. Let's go into the euro Kiwi, but certainly not the robust look that we have when looking at the majors. Obviously, because of the impact, that we'll see from the NFP, or potentially the impact. Euro Kiwi. 68.42, and on the downside, it's going to be 67.04. It's be a pretty good little sell-off. Let's see, euro really comes apart. Just don't know if it'll give up all that. But we will go and list at 67.02. If for some reason the euro were to come under a lot of pressure. Let's go move into the Aussie yen. Let's give it just a little bit right there. 75.64. This probably should continue to have a pretty firm bid with this whole China phase 1 deal signing, which $74.89. And let's go move into the guppy. Q remains is 43.81, especially with it being on a Friday. So maybe a little bit of ways, but it's going to be 43.81. I'm keeping it bearish because we're below 43.81, but overall, when you look at this thing's still bullish, although we were under a lot of trouble down here, and we've steadily risen. Support right now is going to be right there, 42.23. And lastly, with the sterling knot, and this is going to be the area for demand where they could move to if we do get a break lower in sterling, which would be 89.32. With resistance coming in right there. 90.97. We've already had big moves in gold. We already discussed it. I don't really see where not too much thought here. think we even looked on here. There was some pretty good support coming right. Yeah, there. Which we've already tagged it just about 1539.5. And cruise just kind of hanging around 59. SPOOs are at 32.82. New all-time highs again. And as Blake mentioned, I guess potentially we can make it up to 3,300, which is going to keep the bid on the dollar yen. And that's what we have today. So good luck for non-farm payroll. And we'll see you in the chat room. And thanks for joining us here on the European Crossover.